We are live. The FOMC is a minute away. There, at least this statement is. Let's see if they actually do anything crazy. I don't think they're going to cut. Hopefully they don't cut. Or maybe they cut. Who knows? That'll freak out markets for sure. 20 seconds. Oh man, today I'm losing so much money. It's not even funny.
$10.
And we have to look at their statement. We're going to get from.
No change, no change. Rate remains unchanged at 4.5% as expected. So the Fed statement does not include language that inflation has made progress towards the 2% inflation objective, as it did in the December statement. Fed leaving the rate unchanged here. Fed says it risks to achieving employment inflation goals roughly in balance. Unemployment rate has stabilized at a low level. Labor market conditions remain solid, replacing reference in the previous statement to conditions having eased. So seeing a bit of weakness in the S&P 500 and some strength in the dollar here. So Fed adds that economic activity has continued to expand at a solid pace. The vote in favor of policy was unanimous. Balance sheet runoff to continue at the previous pace. The Fed is attentive to risks on both sides of the mandate. So again, just to repeat there, the Fed did leave rates unchanged at 4.5% as expected. Only small changes to the rate statement here. So again, the main changes noting here, statement does not include language that inflation's made progress towards the objective as it did in the December statement, and also notes that the unemployment rate has stabilized at a low level. The labor market conditions remain solid. Previously, it had said the conditions have eased. As we again in the markets, a little bit of weakness in the S&P, a little bit of strength in the dollar as well. Gold extending losses here too. Treasury is extending declines following the policy statement as well.
Increasing the yield of the 10-year and the 30. Oh, that's interesting. That's very interesting. Let's put this here. The S&P doesn't like that. He's probably gonna be hawkish in my opinion. I mean, he doesn't want to look like he's getting affected by Trump. Likely, you know. But if he doesn't play the politics behind it, hopefully he doesn't. You know, the market digests this. So far, market's pretty flat on this news. I mean, there's nothing crazy, nothing new. As long as they don't go, we're not gonna cut ever.
Traders price in less Fed easing this year after the FOMC statement.
Yeah, based on that, we have to wait and see what he says. We'll look at the Fetch Watch tool here.
Traders expect the Fed to wait until June to cut rates based on short-term interest rate futures. US 2-year Treasury yields rise to 4.249%. The 2 to 10-year yield curve little changed at around 33 basis points.
Like there's still, it's. I mean, we're gonna go back to the same story. We're gonna be data dependent and just wait to see what happens, right? It's gotta be. Now, are they gonna take into consideration the tariffs? Probably not. They're probably making models, but they're likely not gonna be making any changes as of yet. I mean, so far the move just seems to be preemptive. That today's decline, there's nothing major that tells me there's something that we should be freaked out about. Oh wow, did this just go? Okay, no, that's me. Okay, that's me. All right, let's just refresh this. Let's see what he says. So it hasn't updated yet. Yo, 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 how you doing? Yeah, it was the expectation, right? Powell's likely to speak, and then the market's gonna figure out. We still have like earnings today later on, so that's gonna be the thing driving markets. It's gonna be interesting to see what he has to say. I don't think he changed the rhetoric of just like data dependent, but they're definitely holding off. The big question is gonna be until when? March, May, June. There's a lot of time in between the meetings. This tells me something, and we have PCE data on Friday, right? Um, so be interesting to try to get something out of him. But yeah, it's gonna be tricky. Oh man, market just gave it all back. Oof. Well, not really, not all back, but it did go back. Tech doesn't like this. S&P doesn't like this. Hmm. Hmm. They gotta, they gotta keep them. That's so interesting. Bam. Oh man, market really don't like this. Just so much uncertainty about everything right now. That's the main problem here. It's just major, major uncertainty in all aspects. Hmm. Well, yeah. Well, we have the questions. Funny enough, Bitcoin is holding. Bitcoin has been quite steady with all of the volatility so far. That's so funny. Hmm. Ooh, 128 times earnings. That's insane. Yeah, everybody just thinks like we just don't know, right? And everybody's telling you everything is fine when it doesn't feel fine. So markets start freaking out, you know? But yeah, I mean, it's hard to know what happens today. It could be a little bit dovish just to calm the markets a little bit and give them a little bit more guidance. Let's see if this refreshed. Not yet. Hmm. Oh man, what are we looking at today? We're looking at Tesla, Microsoft, and And Meta today. It's gonna be ugly. If any capex mentioned, go in, but I just don't think so. I don't think Tesla, definitely Tesla can't mention anything because they're gonna have the demand. I'm sure of it, but I think they'll be. I mean, you know what? Let's actually have a look at something here while we wait for this. But if we go, like we're just high, you know. But like Microsoft, for example, Microsoft tends to beat a lot, you know. This is growth, and this is earnings per share. I think they miss Q2 2024, but the last three times they've like last time they beat heavily to the upside. So could we see that continue? Likely. Let's have a look. So Microsoft likely beats. What's their revenue? And on revenue, they were. I don't think so. I don't think so either. I don't think they spent less, right? Oh man, I'm getting worked here. This sucks. I should have come down in my position a little bit, you know? Should have sold it to the strength, but I continue to see it higher. The more he talks, you know? The more he talks, but last time it wasn't pretty. Last time it was negative too, so this time might be negative too, but then a week after market's up. Microsoft, we have Meta. They're all likely to overspend. I mean, I just don't see them not overspending here. Yeah, Q4, they're likely going to be making money. Oh man, 29%. Damn. They always jump in December. Eh? Like they're just making so much money too. Like revenue is 46 billion. It's a lot. Oof. Ooh, man, it's a beat up day. Like it's just FOMC. Like it's such a messed up week, dude. You know, it's been such a messed up week all throughout. Oh, they make bank, man. Meta makes bank. Meta makes bank. I think the difference here is the profitability, right? have a look at something real quick. I met this Meta's fantastic company too. Nope, definitely don't want to go there. I want to go here. Nope, I want to go. Their PE is sitting at 30. They're an advertising company though. Then their profitability is what's it? Gross margin. They make bank. Profit margin sitting at 35. What's Nvidia's profit margin, I wonder? But Meta is a fantastic company. That's for sure. Look, Nvidia. 55, 35. Then gross margin. Their gross margin is higher. Damn. Insane. Oh man. I have to figure out how to get here. 38 billion this quarter. But I think they're gonna beat that. Their growth too. You know what I mean? Like it's just bam, 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 bam. We haven't seen the cyclicality here kick in. AMD today finally saw some love. And we have Microsoft. Let's have a look.
Let's keep in mind that live at the moment, Trump is currently signing the Laken Riley Act. So we'll see if he does say anything relating to the Fed today.
He's gonna shit on it on Powell today for sure. He's gonna be like, no, 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 this is not good. We have Microsoft. Gross margin, profit margin. It's around the same as Meta's, but they do get a little bit of a higher premium. And then expectations are 68 billion. They make so much money too. To wake up early tomorrow. So we'll see what happens. I don't know if I'm staying for the calls. I might just like listen to it on my own. We'll see how the day goes, and if this gets exciting, we're gonna be, watching paint dry with Powell today. I have a feeling he's just gonna spook market. Mm, just an ugly day all throughout. Holy, holy. Because the problem is we might not see the capex getting reduced just now, but that's the fear is that a year from now, capex, everybody's like, okay, like we've done enough, we've invested enough. Like what's hmm, it's just bam, bam, spending so much money. 30, 44, 14. Oh man, it is increasing for sure. Have a look at their sales. Who's selling right now?
Trump says there was a short-term pause of funding.
Right. And then we're looking at last but not least, we're looking at Tesla. Like this looks ugly. I mean, it just looks like it wants to come down. Market's stretched, but oh, yeah. Have a look at Meta here.
Trump says I paused a $1.7 billion in payments to foreign organizations.
I was having a look at who are the biggest Nvidia buyers, and Microsoft is definitely up there. So it's going to be very interesting to see what Microsoft says. They have them on a platter right now, Nvidia, you know? Like what we could see today is potentially just like Microsoft and Meta just blowing it out of proportion, and then we start seeing that capital enter. And if we see that capital enter, you know, like that would be the ideal. The ideal would be earnings just being nuts right now. Like volatility of January has been nasty. It has been nasty, but to like other levels. Like how much have we gone up and down? It's been like 6%, 6%, 6%, like just 6% drops all throughout. And then the latest drop we got was another 6% from the tops of the Nasdaq. And then the S&P is holding a little bit better. So that just tells me that there's diversification here, right? But 7 minutes away from. Well, actually, I'm gonna get some cooking. I love being prep. Oh no, please tell me I'm not getting disconnected. Market data connection reestablished. Oh man, this is gonna be fantastic. Mr. Bombastic. Oh man. Tomorrow I go on a trip. I'm not even looking at markets tomorrow. Ah, today is the day. Everything happens today. Like they were hawkish in their statement. I think Powell is gonna be a little bit more dovish, hopefully. But I mean, at this point, it feels like I'm drinking so much copium. Oh man. The thing is, since you get out right now, market trade sites will wait for a little bit and then it just bounces up. You know, like the volume in the last couple of days has been, I would say, higher than normal. It hasn't been crazy either, but it's definitely up there.
At 2:30 p.m. Eastern Time, we get the FOMC press conference with Fed's Powell.
Unlikely.
Maintain its. What is your feeling about the Fed being under more of the executive branch's control, more input, as President-elect Trump would like to have in terms of interest rates? Is that sacrosanct to you? Do you believe that the Fed should maintain its independence, or do you feel like it's never really been that independent? What's
No,
your take?
I
What
feel
about
that it definitely should remain its independence. If I'm holding a bond, it is certainly in the government's interest all the time to borrow and spend, particularly under your term, and then you let somebody else deal with the mess you created, and then when they come to power, okay. So that's always the case. So it undermines the storeholder wealth. I think the Fed should target a real bond yield of 2%, by and large. Okay, 2% is not too high, real, and it's not too low. And they should target that kind of a real bond yield, which you can see, by the way, in the inflation index bonds pricing. I think that the cycles that we're going on from one extreme to another are very disruptive. But I think it's going to become a lot more political, particularly if there are problems, because the problems are going to be based on the Fed. And so it becomes political. And yeah, so I worry about that.
no cut March? Then we go May, and then May has the potential for a cut, and then June says we definitely get a cut or a hold. And then no cut July, potential cut start September, October. But that is based on the fact that everything remains the same. And then December, bam. Potentially another cut. Like people are like considering the idea of hikes. My damn. Damn. That'd be crazy. That'd be crazy indeed. Hikes? What could hikes do to this market? The problem with it with unemployment, which is so scary, is the fact that it could just continue to just escalate. You know, and all of a sudden, like if companies start doing bad, then unemployment could go up, and then we run into big trouble. Hmm. We're about to get Jerome Echo time. Is he gonna be late? Unlikely. Am I missing it? I could be missing. Damn. Have a look. Let's have a look.
So we're
Nope.
shortly expecting the start of the FOMC press conference with Chair Powell. So just go over the order of business here. Powell does normally at this point repeat the rate statement, which is already available on the feed, before taking questions from journalists at the event.
Yeah. Well, it depends. I think they're going to be data dependent. I don't think they're going to tie themselves to some sort of like schedule unless like we see any major changes in the data. But if everything remains the same, I think they're going to be happy. They're going to be happy here, right? I was surprised they cut. You know, so it's tricky. I hope so. You know, I'm in the side of I want free money, cheap money, but are we gonna get to the levels we were before? Unlikely. Just this stimulates too much. There we go. I can't see it. Am I missing it? Am I missing it? Echo. Echo. 17-minute timer. What happened? Why has this not started? Because he's late. Oh no.
And Fed's Chair Powell is now approaching the podium.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment
Voice
and
news
stable
disconnected.
prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%. Bolstered
It's funny
by
because we also have
resilient
GDP
consumer spending.
tomorrow.
Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer.
Yeah.
If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or from to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals.
They can't, right?
And,
the moment they change it,
really
it's
keeping
like
our heads
you
down
just
and
lose so
doing our
much
work, and
trust,
that's how we
right? Because
best
it's like
serve
the
public.
president is allowed to change monetary policy.
Whether he's physically communicated his demand to you?
I've had no contact. Thanks.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless the last couple of readings have suggested more positive readings.
This is interesting.
I think policy is well positioned.
Colby from the New York Times.
That's interesting, because if they see any weakness in unemployment,
Chair Powell,
they
how
could
should we interpret
they
the
could
removal
continue
of
to
the line
cut.
from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No, so let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier.
I think market was expecting
as it related to the
him
labor
to be a
market.
little bit more hawkish, being like, nah, but
to shorten that sentence.
he's being fair.
Again, I mean, if you look at the sort of
He's being
intermeeting
fair.
data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where
We already have so many
those
questions.
Could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not.
He's doing his job, man.
To get to a place of understanding what our policy response should be until we see how
this guy freaking gets out of office by cooling the markets and like landing it. He gets the Nobel.
You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder. And meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policies affected at the margin, but we're going to wait and see.
if I can follow up, the idea that you feel the that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
You know, we're looking. It's more the way it works is we are looking at the data to guide us in what we should do, and you know that's what we do. And right now we feel like we're in a very
We're
good
dead
place.
defended.
Policy's well positioned.
The
The
fuck?
economy's in quite a good place actually as well. And what we do expect is to see further progress on inflation, and you know, as I mentioned,
God.
as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but
Yes.
To the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just
Bro.
to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
That's good.
You know, as I've said,
My
countless
job is
times over
simple.
the years, this is who we are. This is what we do.
To print
We study
your
the
money.
data, we analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that that the range of possibilities is always broad, and not just now but always. And you have to. It's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it was, you know, it changed everything. So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Yeah, that's the thing. Is it true? Like, he's doing great, man. I'm sorry, but I have no beef against Powell.
Bloomberg News. You know, last month you talked about a future rate cut as being pretty, you know, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. You know, we want to see, you know, further progress on inflation. And, you know, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation because that takes out the seasonality issues that may exist. And, you know, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and you know, housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress. But being seemed to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, you know, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the
He says you were under it? What did he just say?
Broadly, you know, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, you know, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So
of course.
Right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing. The ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But yeah, I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed."
They need to ask him, do you use DeepSeek to figure out whether you need to increase or decrease the...
How do you expect the unemployment rate to react?
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. And so, but job creation has come down a bit too. So, you know, if those 2 things come down together, that sort of can be for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
You know, we run a very careful budget process. We're fully aware that you know, we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say, so I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. if we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry,
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so we just.
I was surprised nobody has asked that
things are
so
a little
far.
different now. We've just
But
come
yeah.
through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, you know, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. We didn't really know. And, again, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon
So they are
Urbanidis, the
paying
Economist.
attention.
Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis. Although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective, at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So Overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Richard.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we watch, we discussed earlier. One is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's also worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level. Because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see, there's nothing in the data yet on that, but you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts?
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, you know, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, you know, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really
Bitcoin
making
is up
progress.
on
That's
this,
what
eh?
it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's
Bitcoin is
also
up.
the sort of global standard. I think
Well,
that
we are up.
If central bank wanted
Chips
to
is
look
just
at
down.
changing that,
I'm gonna look at
you
Fibus.
wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, you know, we said, what we said was that, you know, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And, you know, our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision we looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Let's go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
You know, so our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's, you know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks that we regulate and supervise do that. You know, the threshold has been a little higher for banks engaging in crypto activities. and that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in that asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
That's it. Now we have earnings. I mean, nothing really happened. Nothing we need to pay attention to. They kept the interest rate steady. That's it. I mean, I didn't hear anything out of the ordinary other than no matter what Trump say, I'm going to do whatever I want. The reality. But yeah. Man, this is such a weird market. Yeah, market sold off today, and but we still have a little bit of risk on the table. We still have the earnings of Microsoft, Meta, and Tesla. So we're gonna be paying attention to those. There's still time. There's like 30 minutes before we actually have to commit. But it's unlikely that we're gonna see. I just don't see anybody shooting themselves in the foot and saying they were planning to cut capex. I just don't see it. That's my personal opinion. I might be biased, so take that into consideration, but yeah, I mean, let's have a look. I mean, the Fed, people were expecting this. This is nothing major, like nothing new. I want to see what the Fed Watch tool is kind of pricing in now in terms of the probabilities, but I just, right? Like we have targets now, and we know if all of a sudden we see unemployment start to spike up or inflation decisively coming down, I think that that's enough guidance to potentially continue the cuts, right? But we have to see those changes. Now, markets are still paying attention to inflation, and many people think that we are not going to hit that 2% rate. Could we not hit it? Sure. I think we're in the right trajectory, right? Let's look at the probabilities here real quick. So yeah, we're expecting a cut by June right now. And then another cut by December. But that's the thing. That's where it starts getting, so it's like all of these numbers are going to be based on a couple of things. Just looking at the unemployment rate and PCE data, which we have on Friday. Interestingly enough, we have PCE data on Friday. I'm sure he had a look at the results already, or at least he has an idea. It's within the parameters, right? But That's the thing. Right now we have like three big names in technology having results. Hmm. Oh man. See, the initial market sold off. I just think it was a nothing burger. It's a good time to, if you didn't get a chance to, market gives you tons of chances to get back in. I think that was it. That was your chance to get back in. And then let's see what. I hope they beat. I hope they. I hope they beat. And I hope they beat good. Meta has to show numbers, and Microsoft has to show numbers to show investors that hey, there is money in this AI spend that we have. And then we gotta pay attention to at least. I don't know if I want to look at. I want to hear sucks or have a look at the times when they're planning to have their. Where is my? So we are expecting results. Have a look here. So we're expecting Meta, Microsoft, and Tesla in about 35 minutes. And then we are expecting, well, IBM don't play no game. Funny enough, IBM has a massive revenue. It has massive revenues. 17 billion ain't no joke. Ain't no joke. Tesla's 27, Microsoft is 68, and Meta's 46. Billy. Wow. What's up, cool? Hmm. Nvidia's PE sitting at right now. Sitting at 48. I wonder who has a cheaper forward PE. Let's have a look. Meta 4 PE. 4 PE is 26. So you see, that's where it gets really interesting because if Nvidia continues to grow the way that they are growing, they look cheap. That's the thing that Meta don't have. It's like what unless they start AIing, gonna call it in this case. Because even Microsoft is sitting at 29. So forward PE, like even Microsoft is a little bit more expensive. What do we have here? Nvidia. Like if Nvidia continues this growth, and that is the beauty and the big if here. Hmm. Earnings will be here. Earnings will be soon. Ooh. Just right now. Like it's gotta be commentary from CEOs tomorrow, right? Commodities are up today. Wow. Wow.
What are you kind of expecting for these Meta earnings? What do you think the market is focusing on for Meta specifically? And yeah, what's the numbers are expected?
Yeah, thanks for having me. So it's funny if you rewind 2 years when Meta was allocating all this capex to the metaverse, and they surprised Wall Street with a capex number that was way ahead of consensus. I think it sold off like 30% or something like that. And then fast forward to today, that capex number that Zuck gave last week was 22% ahead of consensus. So pretty interesting to see a starkly different reaction from investors, and I think that has a lot to do with the fact that there's a large Fed backstop now. But I also think it has to do with where these dollars are being allocated. Um, Core AI and Gen AI instead of metaverse, and definitely want to tie in DeepSeek into this conversation because I think it is going to be a large part of the conversation, and definitely a large part of the Q&A. But for those of you who don't know, Meta takes a purely open source approach to large language models. I'm sure a lot more of you know that today than you did last week. But as Meta's chief AI scientist explicitly told us, this was built largely using Llama and a few other open source models, and this is all work that they're going to use and purpose for their own model improvement. And I think the really important thing to focus on here is that open source means that they're not reliant on Llama workload monetization like an OpenAI is, for example. They aren't selling access to Llama so that developers have access to a proprietary model. They are giving access to this model so that developers, motivated and incentivized by Meta having 3 billion people on its platform, feel inspired to use these frontier models to build on top of them and to build on top of them for where the consumer traffic actually is. So they have a shot of getting paid. And that equation, that competitive advantage of having just half of the world's data on your platform and half of the world on your platform doesn't go away if models become suddenly cheaper. Basically, in my opinion, what that does is it's like vastly pulls forward the amount of innovation from an app level point of view and from a data processing demand point of view. That is going to be funneling through Llama's platform, is going to be funneling through all three hyperscalers or all three public cloud players, so Amazon, Microsoft, who's reporting today, and Google. And I don't think that changes just because models become cheaper. There isn't suddenly going to be another platform with a network effect having 3 billion people where they're going to have the distribution and that competitive moat in order to fend off competition. So from my perspective, for Meta, this is actually pretty positive. So it definitely will pull forward innovation. It definitely will make Meta AI and the AI they're infusing into their smart glasses that are flying off the shelves um, speed up in terms of innovation and go a lot faster. But it also, I mean, Zuck gave this 60 to $65 billion capex guide after all this DeepSeek news came out, but it was right after. So I am going to be interested to hear what he wants to do with this number in 2025, especially because they tell us over and over and over again how flexible these capex dollars are and how flexible this compute is for Meta. This doesn't all have to be allocated to Llama. They have plenty of use cases within their family of apps to do things like create products to raise campaign conversion rates or monetization rates for customers, which is really at the end of the day is all that they're trying to accomplish. Like Meta just wants people on their apps for as long as possible, consuming as many different types of content as they possibly can. And large language models are a great way for them to understand that with more scale and in a more real-time manner to be able to maximize engagement. So there's been just a ton of focus paid on DeepSeek. Meta's fared pretty well actually this week, and I think that has a lot to do with the position that it's taken in this market. It is put the onus on itself to push the industry forward and to give access to these open source models so that innovation can be as fast as it possibly can be. And so that while this process is as rapid as it can be, Meta has a better shot of still being that kingpin in terms of social media and having that distribution moat and that data moat and still fantastic AI researchers to make sure that they are monetizing and actually taking advantage of the Gen AI work in terms of more impressions on their apps, higher price per impression, and overall more revenue. So I think that is going to be a key theme on this call. I think Zuck is going to say full speed ahead and remind everyone that if they don't need as many H100 GPUs or Blackwell GPUs to build Llama 4 or Llama 5, which I think remains to be determined because we've heard a lot from Microsoft about DeepSeek taking their technology from OpenAI unlawfully, or really how much compute actually went into this. But all of this is to say that I think it's going to be Zuck saying, everyone chill out, calm down, like we're fine. And if we happen to be not fine, if this is as real as people think it is, and if it makes models that much cheaper, we're going to allocate all this capex we've had to other very high return purposes and probably cut capex down the road. So from a software point of view, from an app point of view, which is really what matters for Meta, I don't think anything really changed all that much. Now we could get into a whole other conversation about NVIDIA and what this means for them and for Broadcom and for everyone else. And I don't think that's as clear as everyone is making it out to be either. But for Meta, I do think this is largely positive. And I kind of want to tie in Microsoft really quickly, but there's a hand up, so I don't want to be rude. So go for it.
No, go ahead, Brad.
Yeah, so Microsoft, very similar boat. So they do have Azure and massive global infrastructure. So renting out GPU capacity could be challenged in terms of pricing power there. The workloads that they're selling with their closed source models in partnership with OpenAI could be challenged there. But at the same time, all of these headwinds mean building apps and processing data and using the tools that Azure provides becomes vastly cheaper for all of their customers. So in my mind, and I talked about this on Twitter, there's going to be a decision that all these companies make. We can either, and that this depends on the fact that all this DeepSeek innovation is real. So we're assuming that it is based for this conversation. But they have one extremely important decision. They can either say, we're going to pocket a ton of CapEx and let our free cash flow explode, or they can say, assuming that models and apps haven't gotten as cool as they can be, which I mean, use Rufus and use Meta AI and use all these other Gen AI apps, and I truly hope they haven't gotten as useful as they can be. But we can pull forward by several years the amount of cool things we can build into our apps and the amount of cool things that we can do with our models so that we can augment the value and the utility we're actually providing for customers to preserve this pricing power for Copilot and for OpenAI workloads. And I think that's going to be a hard decision until one company, whether it's Amazon or Tesla or Microsoft or Google or whoever, makes the decision to say, screw it, we're going to keep spending and we're going to just innovate as fast as we possibly can. And we're going to make sure we use this to leap as far forward as we possibly can. And I think that's going to serve as a domino effect for all of these companies in terms of needing to spend all of this money too and feeling the pressure. I mean, we hear from Google and Meta and all these companies, the risk is being left behind. The risk is not spending enough. As soon as one company spends like this, if it's Azure, if it's Google Cloud, if it's AWS, I think everyone else is going to feel the need to. And I really think that's going to preserve this GPU renting capacity risk that everyone is flagging right now. But from a hyperscaler standpoint, I will say that because Microsoft has been so fabulously successful in monetizing Gen AI, they do have a larger risk than everyone else because Amazon hasn't really done it. Google hasn't really done it. Copilot has become a large business for this company. So if pricing power for those workloads does wane, then that's worse for Azure and a larger headwind that it has to overcome with all these other tailwinds and offsets that we're talking about. That was a mouthful. I'm going to be quiet now because we have a large panel, and I want to pass it to everyone.
Actually, Brad, I want to keep it on you for one more time. Tesla earnings also coming up. Listen, this is X. I'm
My man,
sorry,
we have
everyone.
Sawyer. We have Sawyer
We have
in the
Sawyer. No,
panel.
but I want to start with
Mhm.
you on I want to start with you on the numbers, and we'll get to them for more feelings on it. But what are some of the numbers you're looking at on Tesla here?
Yeah, so I think I mean I posted the auto GPM X credit estimate, and everyone's saying, well, it doesn't matter anymore because it's not a car company. That might be true that energy generation, storage, and robotics and supercomputers are becoming a more real part of this business. But I don't think we can say that the auto gross margin is irrelevant. So we are looking for that to be around, I believe, 16%. Elon told us last quarter that there were some favorable dynamics and seasonality that meant that preserving that auto GPM probably was going to be hard quarter over quarter sequentially. That's what everyone's expecting. So it's not like that's going to be a negative surprise. But looking for a 19% gross margin, 18.87%. So 19% gross margin. We're gonna be fixated on commentary surrounding how they feel about DeepSeek, and then also two things that are going to be extremely important is making sure they reiterate that the 2025 models are affordable models are scaling as planned. No changes there. I think that'll be expected. And then last quarter, Elon also talked about and correct me if I'm wrong, but I pulled this back up on the transcript because it was kind of a head turner. But 20 to 30% volume growth for the auto business in 2025, which I think would be fantastic if they Mars is also here, so I am really going to shut up in a second. But would be fantastic if they can actually achieve that, and no one is expecting them to. So if he says, yeah, that's still the plan, I think that will be extremely positively received. But we shall see. It should be an entertaining conference call, and I should pass the mic to our Tesla expert now.
No, we appreciate you, Brad, and I'm going to pass it right over to them. Omar, you were the first Tesla expert up here. Not that the other people, not that Stock Talk isn't one. You know what? I'm just going to reframe that. We're so lucky to be joined by Omar's blog joining us up here. Omar, what are you watching for these Tesla earnings coming up?
Hey, yeah, really interesting day on a number of fronts. I think on the Fed, the key comment I think for Powell was there's a wide range of policy possibilities here. And I think he and everybody else are kind of just waiting to see what do some of these other policies that he doesn't have control over, such as tariff regulations, what is the impact on the economy? So the Fed, I mean, even in good times where we have clear insight into federal policy, they can be completely wrong about, inflation being transitory or, maybe you could argue they even started cutting a little bit too aggressively with the 50 basis point cut there, given some of what we've seen from the inflation data. Um, but I think it's really just going to depend on federal policy. Depending on what we see from, doggy, from tariffs, from all these other variables, we could have significantly more or fewer than two cuts. I mean, in some scenarios, they could even raise. So you just kind of have to hope that President Trump is going to keep this in mind as he sets policy and really set policy that is going to allow the Fed to continue to cut. But I don't think Powell even knows. On the NVIDIA DeepSeek story, I think what we're going to hear today from the Mag 7 companies is that this story has just gotten completely carried away. The idea that we're going to see broad cuts in CapEx across the board in spending on AI compute, I think the market will be disabused of that notion pretty quickly as we hear from some of these Mag 7 companies. And I think if you listen to some of the practitioners in this field, people like Jan LeCun at Meta, um, there's a lot of in, incorrect conclusions I think people are drawing based on their lack of deep technical understanding. So, just because you can train a model more efficiently doesn't mean, you're not going to build out that cluster. Having a bigger cluster still allows you to train a bigger model, do test time scaling, train on video, audio. So, maybe you could argue that the pace of growth maybe in future quarters might be different, but we're not going to see anybody cut spending. And I think that is potentially really interesting for the traders in the room, just sort of, positioning themselves coming into some of these calls. In particular, I think the Microsoft call and others. I imagine, Tesla will probably field an analyst question on this topic as well. Now, and I could be wrong, obviously. Maybe they will cut, but based on all the conversations I have, I don't expect that to happen. And I think that's completely the opposite of what the market is expecting. On Tesla, it's going to be a really interesting call. I think their energy business is doing great. Auto gross margins I expect to be down a little bit sequentially, but you really look at the broader state of the industry, the fact that they are even positive with everything that's going on, I think, that alone makes them exceptional. People are going to be listening closely for news on robotics, AI. Just yesterday, ahead of this earnings release, Tesla released a video showing their cars are now traveling from the end of the factory line to the outbound logistics lot a little over a mile without a driver in the car. And Elon tweeted, he said, this is sort of the start of unsupervised FSD. So they got a brand new Model Y. They've got some other more affordable models they're going to launch in the first half of this year. And they've got the launch of their unsupervised rideshare service, which I think they'll reaffirm that they're on track for this year. Maybe we'll even get an announcement of where that's going to be. So there's going to be a lot of interesting details shared, more so than even, the financial commentary, whether automotive gross margin is a few hundred basis points here or there. I think really the roadmap they set out for the year is going to be really key, especially on the AI items.
I appreciate the thoughts there, Mr. Omar. We got about 15 minutes until the market close. Got about 20 minutes until the earnings come out. I'm going to go over to stocks type of first. I know you have all the numbers. Give us a little bit of a number dive, and then let's go over to Sawyer, our Tesla news expert, and hear his thoughts on that. But stocks type, you got your hand up. I assume we got some numbers getting thrown at us here.
Yeah, I got a couple of things, so I'm going to be very quick.
Let's
And
focus. Let's do the Tesla, Microsoft, and Meta numbers. We'll skip the others.
Yeah, so I was just going to say, for the order of the schedule of everything coming out of the relevant ones, Meta 405, Microsoft 405, Lam Research 405, Tesla 407, IBM 408, ServiceNow 410, CLS 415. If you guys want to see the other 23 names that are reporting for earnings after close, I have it all posted in an order of what time they come out. But across the relevant ones, or the most relevant ones, as far as Tesla, Microsoft, and Meta, when I take a look over at Tesla, Tesla's pretty interesting. What we see is we're looking at our implied move at $31.13, or 7.94%. Our previous reactions, we can remember last quarter, we had an absolute monstrous quarter at a 21.92% earnings reaction. Prior to that, it was minus 12.33%, then plus 12.06%, and then minus 12.13%. But the one thing that really stands out and jumps at me when it comes towards Tesla earnings is since the last report, we are up 83.52%. Coming into this report with 6,049,738 open interest, which is absolutely crazy. When we take a look over at Tesla's financials and we're seeing what we're expecting, again, I said numbers at 407, but we were expecting 27.14 billion revenue, and we were expecting $1.25 EPS. I think that that's very doable and very feasible for Tesla. Going over towards the next one that I want to talk about is Microsoft. With Microsoft, our implied move is $16.91, or 3.81% move. Our previous reactions we could see last quarter are minus 6.05%, minus 1.08%, plus 1.82%, and a minus 2.69%. Since the last report, we are practically exactly where we were last time, at 2.5% above last report quarter. Our open interest on Microsoft coming into this one is 2,003,480. With Microsoft, we are expecting to see 68.81 billion revenue, and we are expecting to see $3.10 EPS. Expecting these numbers at 405.
All right. Yep. And then Meta.
Yep. And
let's do it. Let's do it quickly.
Meta, we got Meta, we're expecting 405. We are expecting 46.99 billion revenue. We are expecting $6.76 EPS. Our implied move on Meta is pretty monstrous, $41.19 or 6.13%. Previous reactions minus 4%, plus 4.82%, minus 10.56%. 4 quarters ago, big one plus 20.32%. And since the last report, we are only up 13.49%. But that's pretty much everything I got. All of this is all posted on my page.
On
Yeah,
Tesla EPS, what was your Tesla EPS? I think it may have been wrong.
Give me just 1 second.
77 cents is what Wall Street is expecting there. Some sources have 76 cents, but that is the range we're at. We're going to see with it 77 cents.
We
Yeah,
got
that sounds correct.
You're using some
125
pretty
for
weird
some reason.
items for Cap EPS that throw it off, so maybe you're looking at that.
Cool. So yeah, appreciate that clarification there. I want to get over to Sawyer pretty quickly because we're getting closer to the market ending for the day, and obviously we have the Tesla numbers coming out right around 4:05 p.m. Eastern. Sawyer, I appreciate you for joining us up here. How are you doing today? What are you focused on for these earnings? Obviously, we're gonna get a whole different set of stuff we're watching for it when Elon comes on and speaks at 5:30. But what about specifically with these numbers you think you're watching here?
Well, I think just two main things I think investors in general are going to be focused on. Uh, One is Tesla's more affordable models. Do those still remain on track for the in launch in the first half of 2025? That'll be super important. Um, Elon said Tesla would see, I think, 20 to 30% vehicle delivery growth in 2025 versus last year. To be honest, I think that's going to be really tough, regardless of the new Model Y launch and the more affordable vehicles coming. And that's mainly just because I think it's just going to take a while to fully ramp these new products. And I do think Tesla could sell upwards of 1.5 million units annually of the new Model Y, which is up from roughly 1.2 million currently. But things have to go really well for that. Second thing is, I think investors will be focused on is unsupervised FSD. Elon obviously doesn't have the best credibility when it comes to FSD timelines, but I think hearing him reiterate the timelines that he shared on the Q3 earnings call last October, I think that would be bullish in my minds. Um, I'd also like Elon to hear his thoughts on the Fed EV credit because that will have potentially really big implications for Tesla's short-term delivery volume. And if that were to be canceled or if the eligibility rules were to be changed, that could move numbers quite a lot. And lastly, and this isn't really on the retail investor question list for tonight, but hearing Elon reassure Tesla investors that he will continue to remain focused on Tesla while also doing his Doge work, and that he'll be able to balance both well, I think investors would likely like to hear that.
I feel like there's definitely gonna be another analyst question about it. Listen, I don't know if he's living in a different universe with 26 hours in the day or something like that. But what we were doing before this didn't really make sense to me, and we just added a lot more stuff to
I
it.
mean, he was already running 6 companies. One thing Elon is really good at doing is finding smart people and delegating what he needs to them. So he surrounds all of his companies with really smart people. Gwen Shotwell at SpaceX and various other executives at Tesla. So I'm not too worried about it. But regardless, Tesla investors just like to hear it anyway. So yeah.
So you're the guy I go to for Tesla news. You've been following a lot of earnings here. What is like a normal Tesla earnings release? What type of information do you normally look for? Is there forward guidance in these type of things? Yeah, like when we're looking at if this is someone's first time looking at a Tesla press release, what are the type of things that maybe you normally post first out of it and what to expect?
Yeah, so historically in the January earnings release, they would typically give forward guidance for what they expect for that year's vehicle delivery volume growth. Last year, they chose not to do that. I think they chose just to give a rough percentage. They ended up being off with that somewhat, but I would say for me, I'm going to focus on the Tesla energy numbers. Tesla's energy growth has been incredible. The margins have continued to increase despite prices for their mega packs decreasing, which is extremely bullish. And then they also have their brand new Shanghai mega pack factory already in pilot production as we speak. So I want to hear how smoothly that ramp will go because China built that thing from groundbreaking to finished factory in 7 months, which is insane. That's like 50% faster than they built their Lathrop mega factory in California. So Tesla Energy, I think, will be a growing part of the overall Tesla story, but I think for most long-term retail investors, they're just going to want to hear what's going on with Optimus and FSD, obviously.
Omar, can I throw it back to you on that one on kind of like as we're heading into this press release on what you think you're watching for, what you kind of the headlines might go to first about the press release specifically in about 10 minutes, 15 minutes?
Yeah, I mean, one of the first things I like to look for is just the FSD miles, any stats on usage, the number of users. They'd mentioned previously that this quarter they are hoping to release the software into more international markets, including China. China's probably the most material of those. Europe as well is a large market. That's probably going to take a little bit longer. But any sort of news on that, I mean, it can be very material to the sort of margins and average selling price of the product. So if they're able to launch this in the Chinese market, which I think is now their biggest market, that could be material. And any sort of uptick in usage, whether it's more miles or more paid subscribers, this is going to be something that I think Wall Street is looking at closely in just following the story of this company emerging as more of an AI play where you have users paying a recurring subscription for an AI product rather than all of the earnings being tied to the number of cars they sell in a given quarter.
Sorry, you got me right when I was
No,
posting a little tweet there.
I figured. I
Yeah,
figured.
so I want to, before I throw it over to Stock Talk and get your thoughts, we're about 10 minutes away from these numbers being released
Hmm.
for Meta, for Tesla, for Microsoft. Expect a lot of craziness there. We're going to be doing it as best as we can. Pinned up in the nest above, though, is the tool that most of us, all of us use, Earnings Hub. This is the best calendar out there. Will make your earnings season experience significantly easier. You can also listen to the earnings calls on here. There's a lot of other great stuff. So
Oh,
as we're going through the madness, the tweet pinned up in the nest above will help you settle through that a lot easier and make your earnings season experience significantly easier. So shout out to that. Shout out to Earnings Hub and Hamid for creating a fantastic product. But Stock Talk, I want to throw it over to you as we are now 10 minutes away from the Tesla earnings, and we've been on live for a whole day now, but we haven't actually talked too much about Tesla. So I'm curious on what you're watching here, specifically about the kind of numbers that we might get in here. I know we're excited to hear what Elon has to say in a couple hours, but yeah, what are you watching for this data being released in 10 minutes? Mr. Talk of Stock, if we have you.
Yep, I'm right here.
Perfect.
I talked about this earlier, but I think myself and I think a lot of the Tesla shareholder base, frankly, is just less concerned about the immediate fundamental results of the business and much more concerned about what's going to be happening on the Optimus side and the full self-driving side. You know, Tesla released an update yesterday that their vehicles are now driving themselves to the distribution point, which is pretty cool. No one's in the car; they're just driving themselves. It's like a mile and a half drive, I think, or 1.2 miles, something like that. So
Wow, I
that's
didn't realize it
cool.
was that long. That's epic.
Yeah, but
wow. That's very
obviously the
cool.
thing that matters is actually getting a deployment program started. There was news out today that Waymo is expanding to 10 new cities. And so they're taking a pretty aggressive, or starting to take, I should say, a more aggressive approach to their city by city expansion. Obviously, I've talked about this before. That's a very different strategy than Tesla has. But I think people want to see the program start to be enacted, especially because Elon's been saying it for several years. And, he's reiterated that they're going to start, pilot program either in California or Texas or both this year. So I think investors want to see that, and I think they want to see updates on Optimus. I think the shareholder base, both institutional and retail, is more concerned about that. I mean, just speaking from Wall Street's end, almost all of the upgrades that have come this year on the stock have mentioned one of three things, or all three: Elon's relationship with Trump, full self-driving deployment, robotaxi deployment, and the Optimus program. Those have been like the three centerpieces of every major Tesla analyst upgrade. None of them, none, have centered around a fundamental inflection in the business. None of them have been like, yeah, we think margins are going to go way up this year. Like, not a soul on Wall Street is saying that. They may go up. I'm not saying they will or won't go up. I'm just saying that's not where the focus is from institutional investors, and I don't, frankly, think that's where the focus is from retail at all. I mean, generally, speaking, most of the retail crowd is pretty patient when it comes to that stuff, and they're focused on the bigger picture, and they're focused on, visionary investing, if you will. That tends to be how the younger retail crowd is. I mean, especially the younger retail crowd. So that's where I think the shareholder base's focus is. And I think anytime you're going into an earnings report, you have to ask yourself, what is the shareholder base expecting more than, what are the numbers on the paper for expectations? So, yeah, I don't really have too many thoughts on what the margins are going to come out as, or, um, anything on the fundamental side of the business. I'm much more concerned about updates in those categories.
All right. We are getting to the market close here. I'm both excited for this and excited for this to be over. So we're heading to a weird
Yeah.
spot right now. But yeah, market is less than a minute until we close. One more time, we're about to get into some craziness here. As numbers coming out, we're digesting in real time and trying to pass along as quickly as we can. But sometimes it can, take a second to really digest some things.
Oh,
But yeah, market's closing. What's up, Wolf?
Nothing. I was just gonna open.
market
Well,
close.
I guess as the numbers drop, I have a couple of screens up here. I can just keep my eyes on them.
Yeah, get those price movements up.
So
We're really
Yeah, I've got
focused
it up
on
here.
Meta, Microsoft, and Tesla. Market is now closed. If anyone sees those numbers before me, feel free to jump in. But obviously, there's going to be a bunch of earnings here. Tesla, Meta, and Microsoft are the ones that we are looking forward to. Brad, the answer to your question is yes, of course. But yeah, here we go.
Awesome.
Yeah, we got earnings hub open. Hamid, you got any words, quick words before we keep going here?
No, I'm like constantly on the page looking for the
Me
numbers to
too.
come out.
I'm really I wish Meta and Tesla didn't report on the same
At the
day so
same
I can give them
time, too.
focus. Yeah.
Well, Meta and Microsoft are what, both 4:05, and then Tesla 2 minutes later, according to Earnings Hub.
And
So
all other
Microsoft Q2
calls
earnings
are
coming
likely
through
to be
now.
at the same
Revenue
time
is
too.
a
So
beat
that's
I think
another
Tesla's
indicator.
might be a
69.6
little
billion on
later.
estimates of
Tesla's is normally 5:30
$68.92
p.m.
billion.
Eastern, and the other two
EPS
are
Oh, that
at
would be
Microsoft,
nice.
so is it
$3.23. So that is a
$3.23?
beat on estimates of $3.12.
Uh,
Cloud
12?
revenue $40.9 billion, a miss on estimates of $41.1 billion. Intelligent cloud revenue, a miss as well, $25.54 billion on estimates of $25.89 billion. As for Azure and other cloud services revenue, X4X, that's up 31%. So again, to recap there, headline revenue for the second quarter for Microsoft was a beat, $69.63 billion on estimates of $68.92 billion. EPS was a beat by around 10 cents as well at $3.23.
Super interesting. This market didn't like that at all. Wow, that's super interesting. Microsoft beats, but what is the news here? Come on, give me the news. Wow. Microsoft is getting sold out on this news. Whoa, 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 whoa. So earnings per share beats and revenue beats. It's solid. They are solid beats. Now, why are they not liking this? Hmm. Oh, Microsoft bouncing. That's super interesting. We have Meta and Tesla coming out too. That's so crazy. So like almost a 4% drop right there. Plus like the initial weakness that we've had in the day. It's insane. Oh, okay, cloud revenue missed. That's not good. Tesla coming in now. Or it feels like it at least. Wow, cloud revenue comes lower than expected, which oof, oof. That's not good. That could be bad. If all of a sudden we start
So
seeing
Tesla's
major
fourth
misses.
quarter earnings coming through. So adjusted EPS at 73 cents. That's a miss on estimates of 76 cents.
Okay.
EPS 66 cents. Fourth quarter gross margin 16.3%. Fourth quarter adjusted net income at $2.566 billion. Operating margin 6.2%. Fourth quarter free cash flow at $2.031 billion. Tesla fourth quarter adjusted EBITDA at $4.922 billion. So Tesla expects energy storage deployments to grow at least 50% year over year in 2025. Tesla fourth quarter revenue.
What's revenue at? Hmm. Oh
So
my.
Tesla expects Cybertruck eligible for IRA consumer tax credit. And Tesla achieved record deliveries in China in the fourth quarter. Tesla say less cost reduction than previously expected.
Hmm.
Now shortly expecting earnings from Meta.
Meta hasn't had earnings, so this is just a random move on Meta. That's hilarious. I think it's just funny enough. Meta is not meant to have any like revenue gains from AI so far. It's only a cost. So it's gonna be the advertising revenue. Hmm.
Shortly expecting Meta's fourth quarter earnings. And at 4:10 p.m. Eastern Time, we get IBM's fourth estimated revenue at $17.54 billion.
Voice news disconnected.
Whoop. Like this was sort of expected with Microsoft at least because they're putting Copilot in their normal subscription and then they're increasing the price a little bit of it. Come on, Meta. Come on, Meta.
We expect energy storage deployments to grow at least 50% year over year in 2025.
Noting the
The Meta
Microsoft
numbers
AI
aren't
added
out,
13
right?
points
Because
to
it's
Azure
bouncing pretty hard
revenue
back
and
up.
growth
Tesla
versus
said
12 points
Bounce.
quarter over
plans
quarter.
for new vehicles, including more affordable models, remain on track to start production in the first half of 2025.
Come on, Meta.
Okay.
Decent bounce. Omar, what else are you seeing in that Tesla deck?
Takes a while to dig in.
Yeah, they're reaffirming they're on track for the new affordable models. They said they invested in production capacity
Yeah, I
in
know. I'm looking at it.
2024.
I'm looking at it.
Um,
It's not
AI
good.
training compute increased by 400%. That's a pretty interesting figure and likely going to be a topic of conversation given some of what we've heard in the news recently.
I did see that forward one. That was an interesting one. Energy storage deployments.
Yeah. It just
Is there
I
any
think
change to
Microsoft
the
had to do
current
with cloud.
installed and annual
Seeing
production? Let me see if
IBM's
that's
earnings coming
changed.
through, adjusted
They
EPS at
finished their Megapack
$3.92.
factory in
That's a beat on
Shanghai.
estimates of
That should be great.
$3.75. Revenue $17.55 billion. It's a beat on estimates of $17.54 billion. So IBM outlook fiscal year constant currency revenue growth of at least 5%. And fiscal year 2025 revenue view at $65.45 billion. IBM's fourth quarter gross
I'm so
margin at
surprised at the Microsoft
59.5%.
reaction.
Gross profit $10.439 billion. Fourth quarter net income
Who would have
$2.915
thought?
billion.
Who would have thought?
IBM's outlook. So IBM's outlook for fiscal year free cash flow at $13.5 billion.
Wow, insane. I'm ready. I'm ready.
So IBM
Dragos,
says generative
I'll give
AI
you a
book of
summary at the end.
business now
I'll
stands at
explain.
over $5 billion inception to date, up nearly $2 billion from the third quarter.
That's crazy. It's a good move right there. Goes to there. Ooh. Oh, wow. People are liking IBM right now. Wow. Yo, what happened to Meta earnings, man? What's going on? What? 10% up. Wow. Give me them earnings. Come on. Wow. That's pretty crazy. That's pretty crazy. Who would have thought? Why are they going up like this? Holy. That's impressive. In the world? Now we're waiting for Meta earnings. Man, just pumping. Market's looking for somewhere to go. Holy smokes. Give me news. Give me stock detail. Bam. Software revenue up 10%. Consulting revenue 2%. Infrastructure revenue down 8%. Full year highlights. Revenue off $62.8 billion in the 1%. Okay, currency gains. Crazy. Their software is increasing. Oh my god. Man, I haven't heard the Meta earnings. Have they come out? Am I missing something? Now this is scary, because if they start missing all of a sudden, like they didn't miss, they did great. But well, I don't know. Tesla, I didn't pay attention to Teslas, but I know that so far, yeah. Wow. IBM did great. They no, they beat on revenue too. So Microsoft earnings were great. They are increasing revenue and they are increasing earnings per share. The only thing that was scary with Microsoft is the cloud revenue. The intelligent cloud revenue missed. And that's scary, right? Like on different facets, because all of a sudden, like people are asking the question now, how are we gonna make money out of everything, out of the all of the LLMs and all the infrastructure that we're investing in. So it's warranted, but at the same time, they are making money on other parts of their business. It'll be interesting to see what Meta says, but they haven't released yet, I think. Hoping to get the data soon, but because the thing is Meta in this case is gonna be like the story, right? It's like, okay, like we're gonna continue to spend. Thing is just like we might get to a point where one of the guys that I was listening to just now, he was talking about how capital expenditure, the more you were spending in AI, was looked at favorably. But now we might head up into sort of the metaverse investment of Meta, where it's like you spend more than expected, and then you end up getting punished for it just because investors didn't see the return on it. That could be one thing. I'm surprised. I'm surprised Nvidia is not moving any of this, right? Mm. Meta should be releasing any minute now. I think they're late, but
An increase in a quarter.
That's insane.
That was a stat that I was curious about. That's really impressive.
Are you sure, Omar?
Yeah,
So
I just pulled up the Q3 release.
Yeah, you might be right. Actually, the chart. I'm wrong.
Omar, what are they doing then? They're doing how many miles a day? Is that 10 million? What am I thinking? 100 million?
Why would you do this to
Well,
yourself?
90
I'm just
days
like
in a
thinking,
quarter.
okay, is it a 90-day
Well, they're driving
quarter?
around
We
4
got a
billion
billion.
miles a year.
We got 90. It's 11111. What is it? It's 11.
I'm just gonna let you fight this one out. Fight your own battle here. You
Die on
started this with
hill.
your.
give me Meta, but no results yet. Eh? No Meta results yet, man. So, what has happened today? I'm gonna put everything on here. At the same time, we're still waiting for Meta results, but it's so tricky. This insane, insane. IBM is pumping. Holy, what a rally there! Who would have thought, eh? Funny, like that's so crazy. Nothing on Meta. Nothing on Meta. What data do we have tomorrow that could freak out markets? We get the retest and then hopefully we don't break down tomorrow. But well, we have GDP tomorrow, 1:30, and then that gives us a clear idea. And then we have PC data tomorrow, Friday, and that's it. That's the week right there. Man, I freaking knew it. I
Trump
freaking knew
says
it.
the Fed has done a terrible job on bank regulation.
I freaking knew it. I'm selling Pokemon cards. I'm making more money trading Pokemon cards than freaking some stocks. Market seems to be cooling off a little bit. Let me put it back.
And Trump
What
says the
happened to
Treasury is
Meta?
going to lead the effort to cut unnecessary regulation and will unleash lending
Yeah,
for all
yeah, yeah.
American people and businesses.
They gotta cook those numbers for sure, for sure. That I agree with. It's impressive. I definitely want to dig a little bit deeper into it, just because I was like, shitting on them this morning. I was like, oh, you imagine? But interestingly enough, give me Meta, man. Come on. Holy.
And more comments from Trump says that if the Fed had spent less time on DEI, gender ideology, green energy, and fake climate change, inflation would never have been a problem.
Wow. Oh man.
But keep in mind, we are still waiting on Meta platforms to print their earnings.
He will unleash Donald Trump. The Treasury is going to lead the effort to cut unnecessary regulation and will unleash lending for all American people and businesses. Wow. Man, where's the man? Where's the meta numbers? Holy smokes! Thing with Meta is just print money. You know what I mean? Like their advertising revenue, if they just have to figure out ways to keep people using Facebook, Instagram, all of their social media apps. And then like incorporating Llama into like WhatsApp and stuff. Whoa, it would be insane. Like that's the play that I see for Facebook. It's just that like the implementation of that would be crazy. Yeah. I mean like it's IBM, you know what I mean? Like sure. But did you think about IBM before today? Be honest. You know what I mean? Hmm. Nvidia's bouncing. It is. It is. But I mean, it's their cloud revenue, right? I mean, it's I somewhat saw it coming because they are packaging Copilot with their Office subscription, right? Like they're hoping that people start using it and realize that it's really good, and then hopefully they want to sell it as an add-on. Every single time Microsoft has done that, it hasn't ended up well. You know what I mean? But now maybe maybe it's the day that you start paying attention to IBM results. You know? So that's where potentially is like what could I expect? What can I see, right? I mean, we know that we're still not getting a return, which is a little bit scary for Nvidia. I'm kind of surprised. I'm kind of shocked at the fact that because Microsoft missed, Nvidia is bouncing higher. Um, I would assume that because they missed, you would think, oh, maybe they were going to cut back spending. I don't think they are at all, because I think they reiterated their expenses. So yeah, you know, I think it's short term blip. Like it's just it's the Microsoft always runs into this problem, and I just don't think that they're the the best innovators right now in terms of how they're going to implement these techniques and this technology. The fact that Copilot is in their Office suite, it's going to be good. I think it's going to be good, and it might actually get people back into Office. This means that everybody else is going to have to do it though. So Gemini is going to have to do it, and Gemini like Google has done it already too. They've incorporated it, and that's where the big issue comes, right? The commoditization of the LLMs is what's going to drive this fear for now. The question is how do we implement AI for consumer services? Could we see it? I mean, I do see it. I just don't think AI is only, it's like we've haven't the question here is not LLMs or AI, but compute in itself and what they're using it for internal uses within their companies and how they're making them more productive. I mean, like if you look at the Microsoft earnings, they're great. If you look at their revenue, it was great. They're still growing. They're a massive company. They're a $3 billion company and they're still growing. So yeah, this is just, teething pains when it comes to research and development inside such a monster, right? It's how do you put it with a current suite of products and services. Markets are liking this. They're bouncing back. I mean, the IBM one is interesting because IBM software. I think it was the software side that did really good. I'm gonna dig deep. I'm gonna do a video. Let me know in the comments if you want me to talk about it. But I'm super surprised at IBM. Like this is extremely impressive. You know, for sure, for sure. Ba-da-ba-da-ba-ba. Mm. Man, where's the meta earnings, man? Freaking, it's already 25 minutes. We haven't gotten a result. We're probably gonna get it at 30, in all honesty. At this point already. You think Apple will screw it tomorrow? In theory, Apple is the winner out of all of the things that just happened, Like, I'm surprised by it. I don't know. You know what I mean? I don't know. I don't follow IBM, So it's very difficult for me to give you an idea. Like I saw that they were having earnings and I was like messing about. I think I did it on post, but but I don't know. You know what I mean? Like it could be the fact that they I think let me have a look at the
So
numbers.
20 minutes after schedule now, still no signs of Meta Platforms earnings. Again, we'll
Where
keep you
was I
posted on the
seeing?
print as soon as it's available.
We'll get the numbers. We'll see it move right here anyways. We'll see it move on the center one stage, so just pay attention to those. Tesla's bouncing back. So that was something that was very interesting. Something that they added. One of the guys talked about it. I barely caught it, and was that I think they are growing AI efficiency by 4x. Insane, insane. Uh, so the market is liking this. I think one of the guys that I was listening to also mentioned man, market's loving this. The numbers are great. Don't get me wrong, the numbers are great. But again, I want to reiterate this, and this is just my train of thought based on the last couple of days of analysis, but I want to reiterate this. Microsoft, Tesla, freaking Meta, Amazon. Who else is doing? Who else is doing? Apple. You know, they're all companies that make other products, right? And their research and development, it's AI. So just because AI is cheaper to make or more efficient or there's no way to monetize it just yet, doesn't really change the fact that it's a new technology that they're investing in through their original businesses. So they are building on top of a very strong foundation, which does not take away the reality that is like Meta sells ads, Microsoft sells software, computers, server space, and Excel, which is my joke. The only reason Microsoft is still alive is because they have Excel. you know, so at the end of the day, all of these businesses run on something else and they make the bulk of their money somewhere else. This is just the next phase of evolution and how they're planning to spend their capital. Man, I'm so bad. Like if I end up the day at zero, I'm a grateful cookie. But Tesla's bouncing. You know what I mean? And this is pretty impressive move too. 6% down and then 12% up from the lows. That was a really good entry point. I'm kind of surprised. Is he speaking? Let's have a look. Earnings. Man. By the way, If you're new to the channel, don't forget to hit that like and subscribe. Let me know that you're loving the content so I can do more of it. Otherwise, I don't know, you know what I mean? But Milo Dragos, thanks so much. Colton, welcome, welcome. I think I've seen you before. You've probably been. I don't know. It's hard. You know, the last 3 days I barely slept, and it's just been a matter of research whether Nvidia is actually gonna make it out of this alive, or should we sell all of my shares. So far, I think they're doing okay. So far, I think they're doing okay. So one of the things that people are going to be paying attention to in their earnings calls is going to be whether they oh man. Whether they're gonna continue to spend, and I think they are. 'Cause like they just can't stay behind, you know. I hope. Well, based on how my numbers were during Powell, you know, Powell always does the same thing. But I think it's just we've had so many news, all one after the other, you know, that it's like market just goes bam, 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 bam. You know, it's like we got DeepSeek, and then we got freaking Powell, and then we got Trump, and then we got Powell, and then we got inflation, and then we got bam, bam. It's just bam, 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 bam. And like yesterday, there was no data. Yesterday was like the eye of the storm. You know what I mean? Like we saw that bounce back, and it was like, okay, everything is fine, but everything is not fine. Today, market spooked again. It's just right now, market's trying to figure out which way we're really gonna go, and then it's like we're still trying to figure out like right now we're trying to figure out whether it's up or down. That's it. Like the volatility of all of January has been crazy. I called out January to be crazy. I didn't think it was going to be this crazy. I thought like one or two drops. Well, we're trying to get like an understanding, but you can never know with Trump. That's the worst part. You don't know with him. You know, it's like, is it good? Is it bad? Was he talking? Yeah, but yeah, yeah. Sure. Just like OpenAI did. You know what I mean? Like, sure. Yeah, what they're saying is that they use the model in order to train it. So instead of like looking for research and scraping the web, they just like ask ChatGPT a bunch of stuff in order to help train it. Yeah, yeah. I definitely saw. I've been looking, like I've been doing the last since Monday morning is the only thing I've been looking at. Been trying to figure out whether this is real, whether this is fake, what is the consensus, what is going to happen, how does this shift the market. I'll give you my 2 cents on it. I don't I think this is good for chips. This is good for yeah. Well, that's the thing. You know, if you listen to Jensen, right? Like we just like he says is like we don't have enough data to train, so we have to make our own data. It's nuts. It is so nuts, you know? Or he likes the numbers too much and he's waiting for the bululu to stop. I like Meta 400. Sorry, I like freaking, what am I talking about? I like Tesla at 400. All right, let me go back to Microsoft here. Let's see how it's doing. Let's have a look. I don't think he'll miss. In all honesty, I don't think he'll miss. I don't think he'll miss. I don't think he'll miss. Mm-mm. Didn't he just fire a bunch of people too? So yeah, one of the things, yeah, the other thing about DeepSeek, right? Like I just assume, like let's just assume that it's real. And one of the compelling arguments in this case was that okay, like it's real, people are really not going to spend, but it's like okay, how big is the team at DeepSeek, right? Like it's apparently it was like a handful of engineers that managed to do this, right? But interestingly enough, you know, ChatGPT didn't have what DeepSeek had, which was ChatGPT. So making ChatGPT with ChatGPT cuts down your research and development by 10x, and it cuts your cost down by 10x, which is what we want AI to do, which is increase productivity and reduce cost of future technology. We wanted to figure it out for us, so we don't have to actually spend the time on the resources to do it. Thus, the fact that we got what we wanted from AI, which is to reduce inputs, to reduce, right? So the big question goes down to this, right? Like right now, we're not able to see all the benefits that AI is bringing, but it's making every single member of your workforce 10 times better, 20 times better, and the selected few 100 times better. You know what I mean? So all of the sudden, the same expenditure that you have on labor and mano de obra, tío, freaking workers, they've just became your workforce just became more productive. So that is what the face of how you're gonna see how we start working with these tools and technology and how that brings us forward. So do you think now that this has been proven, you know what I mean? It's like all of a sudden what took Microsoft hundreds of engineers can be done with a handful of engineers. What are we talking about here? What are we talking about here? You know? Let it be. Like whether it is or it's not, I think it's great news. I don't see the negative side of it other than hey, worst case scenario, the Chinese are better at making AI. You think the Americans are not gonna throw money at the problem? Come on. Come on. Come on. Yeah, by the way, I'm a massive holder of Nvidia, so take whatever I say with a kilo of salt. Kilo of salt time. I need to get a kilo of salt and I'm gonna put it in the back. I take a kilo of salt. But I agree. You know what I mean? I just like the timing. It's so beautiful. You know what I mean? Like Monday, like Davos. You know what the worst part is? It was in Davos.
Keep in mind in
They
around 10
talked
minutes
about it.
time at 4:45 p.m. Eastern time, get the New Zealand trade balance data. The annual trade balance prior was a deficit of 8.25 billion. Trade balance prior a deficit of 437 billion. Exports prior 6.48 billion. Imports prior 6.92 billion. So again, just to keep in mind, we are still waiting on these Meta earnings reports. It was meant to be posted at 5 minutes past, over half an hour late at this point.
That's so crazy. The Chinese are hacking Llama. So, the news today, stocks fell and bond rates climb through both reduced large swings after the fears of the Federal Reserve. I'm in all honesty, I'm reading the news that just came into my dog. you know. But yeah, the Federal Reserve held interest rates steady. I haven't done the summary because I'm waiting for the meta. Because I bet you the moment I do them, meta, it's gonna come out. It's always the same. But the Federal Reserve held interest rates steady, and they said one thing that they've been saying for the dawn of time since I've been an investor, and it's we're gonna be data dependent. What does that mean? That means that if everything stays in line according to expectations, they're probably not going to cut. But if we start seeing the data become a little bit more favorable, they're open to cut as long as unemployment doesn't start ticking up, which is the thing that they're paying attention to. But they do believe that they're still restrictive. We had Microsoft had amazing results, but the market did not like the fact that they missed on data revenue, and that is spooked the markets. Tesla also, did they beat expectations? I have no idea. I actually haven't looked at the numbers. Let me have a look here. Bam. Yes. So Tesla missed expectations, hitting 73 cents instead of the 76 cents expected, and revenue came in under expectations. The market initially sold off, but bounced back. I really don't know why. But hopefully yeah, you do. Like if you're a currency trader, you do. Um by the way, you know I'm changing, well, whatever. Okay, I'll figure it out. You know, I'll do it later. So yes, we have to see what Tesla does tomorrow. IBM was the surprise of the evening, beating earnings expectations and revenue expectations. Gross margin was 59.5%, and they were up 10% after markets after the news release, which was a shock to everybody in the chat and to myself. We'll be making sure to do a deep analysis on IBM tomorrow, given the fact that it's looking interesting and the market seems to agree. We're still waiting on Meta earnings, and Zuckerberg has run away. We don't know. Yeah, it's an insane one. Market does this, comes back down. When it's so. Yeah, I haven't had IBM in my watch list for a long time, but it's definitely going up there for sure. I want to be paying attention. Yeah, I mean, I think I mentioned everything. Now we're just still waiting for Meta earning. That was what, 5 minutes? That was actually good. Man, I need to get better at these summaries. I need to get better at these summaries. Slowly but surely. Slowly but surely. Oh man, come on, give me Meta. Come on, you see? I freaking knew it. I freaking knew it. Whenever it does this, like if it goes bam, 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 it goes higher. But right now, bam, 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 and it's gonna go here and it meets somewhere in the middle. Bro, I think Amara's gonna do so good. Up! Up!
So seeing Meta earnings come through now. EPS a beat, $8.02 on estimates of $6.78. Revenue a beat, 48.39 billion on estimates of $46.98 billion. Operating income a beat, 23.37 billion on estimates of $20.09 billion. Ad revenue a beat, 46.78 billion on estimates of 45.65 billion. A Reality Labs revenue a miss, 1.08 billion on estimates of 1.11 billion. A Family of Apps revenue 47.3 billion. That's a beat
I want
on
to buy
estimates
this.
of 46 billion. Reality Labs operating loss is higher than expected, or sorry, lower than expected, I should say. 4.97 billion. The estimated loss was 5.1 billion.
Oh, I should have bought that. I should have bought that. That was a mistake.
So overall, strong earnings here from Meta on the headline numbers, at least. Looking to the Q1 forward guidance now, they see revenue at 39.5 to 41.8 billion, within the prior range of 41.67 billion. A Meta comment that they are not providing a full year 2025 revenue outlook, though.
Is that why? Ooh, okay, maybe that's why.
They
But there we
also
go.
upgrade their total expenses for 2025. They see 2025 total expense at 114 to 119 billion. Prior estimate was 108 billion.
They're spending more.
So Meta shares falling post-market despite the Q4 beats on
Yeah,
first
do you see?
quarter
Oh, I
sales
should have bought. I
forecast,
should have bought.
trailing
I
at the
should have bought.
midpoint.
No, I freaking knew it.
Meta also
That was
comment that
weird.
regulatory landscape in the EU and US could impact businesses.
This is outrageous. That was a massive beat. A massive beat. The fact that they're not offering guidance though, it's I think what's spooking them. But this is great. So costs are higher than expected. Costs are higher. They want to spend more on AI tips. I have some AI tips I want to sell. Like here, let me call Zuckerberg and selling my AMD card, my 480, RX 480, dude. Good card. Back to even, bro. It was a massive beat. Really? Have a look at why. It's insane. Rally last misses. Maybe capex. Could it be capex? Sees 2025 capex 60 to 65 billion. Estimated was 52 billion. So that means that Nvidia pumps tomorrow. I'm calling it today. Nvidia pumps tomorrow. If you didn't get your chance to buy Nvidia, You've lost it. The boat's gone. Boat's gone. Boat's gone. Bam! Let's go. Let's go. That's good. That's what I wanted to hear. That's what I wanted to hear. Bam. Bam. That's great news. Bam, 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 bam. I didn't. Did I sell some Nvidia? Bro, I want more. I bought more. Yes. 2 days ago.
So just under a minute to go now to get this New
What do
Zealand
you
trade
think is
balance data
negative?
as well.
I bought more. I bought more on 117. I didn't just buy freaking stock. I bought call options on like leverage TTS. I think they're so wrong. I think they're so wrong. The
10
market gives you
seconds.
opportunities and you just gotta take advantage of them. But man, this is a fan freaking news. Total 2025 expenses goes up. This is not nice,
Trade
you know.
balance, a surplus
But again,
219 billion, 219 billion. Annual trade balance, a deficit 7.67 billion, 7.67 billion. Imports at 6.62 billion, 6.62 billion. Exports at 6.84 billion, 6.84 billion. Numbers in New Zealand dollars.
I wish. I wish. I have five stocks of Nvidia, and I would like to propose something to the shareholders. I would though. They let me speak. I'll speak gladly. All right, guys, listen. Fuck the Americans. We need to sell to China. Again, what? The American ain't gonna buy from us? Nah, nah. You know what? Let's start a cartel. Talk to AMD. She your cousin. We set up freaking monopoly. Talk to TSM. And let's bring the Dutch in. They know all about monopolies. Bam. Let's do it. You know what? Each ship, $1 million. Make America print again. Oh man. Oh. Like it's been in the market the markets have been like, it's like I'm not celebrating because I'm not celebrating because I'm freaking like making money. I'm celebrating because I'm losing less. Like today's a good day. That number there, it's a good day. You see, the light is red. It's a good day. It was a great day. Could have been worse. Could have been Monday was worse. I can guarantee you that Monday was worse. Nvidia is sitting on 125. We're retesting the resistance. I'm more than happy to retest it. Let's make it support and let's continue to go up. More than happy to do that too. It's a good day. That's a great day. Some days, less red is a great day. Oh man. I'm baffled by the fact that Nvidia is sitting at 400. That's such a weird line. I'm baffled by the fact that Tesla, like, I'm really baffled by the fact that Meta is not pumping and it's flat. It could be market expectation. I think I touched what negative 8K at some point today. Yeah, yeah, bro. Yeah, yeah. So today's a great day. Today's a great day. Like obviously, like like at some points, like I think the day started okay. It turned like there was definitely de-risking today. We have to. There we go. Freaking! I knew I should have bought. This is gonna end up like 5% up today. Meta 5% up today. Easy. And if Nvidia doesn't go up tomorrow after the increasing capex, I can't. I can't even have one today. I can't even have one today. I wish I could have one because I need to wake up tomorrow. You know what? Friggin'. But I need one. I want one. I want one so bad. I just can't. Not today. Not today. I need to be clear. I need to I need to remember this pain. It's usually when the pain is like this, like the last 3 days have just been so rough. And I wanna, but I want one so bad. I think we're doing a Market Buzz live stream tomorrow too. That's a tomorrow problem. I used to have a friend that used to say that. I can't. I'm waking up early. I'll have a fuck it. Fucking bad influences. Fucking. Bro. Oh man, I'll have a tiny bit. Tiny bit. Oh, I'm getting my cup. Get my bottle, even though it's in my office. Welcome to another episode of Scotch and Stocks. All right. I go here. Hello, and welcome to another episode of Scotch and Stocks. Don't forget to freaking subscribe. Summary time. Today was an interesting day. This whole week has been very hellish for stock investors. Stock market has been crazy. A little bit of whiskey. Hopefully it tastes good going down. After my summary, I'm going to drink it and I'm going to bed. So it's going to be quick and it's going to be easy. So first things first, Monday, deep sea spooked markets thinking that chip investments were going to disappear. Not going to happen. Capital expenditure by the big boys is starting to go up as results from Meta. We're going to be discussing in the episode today. We're also going to talk about what the FOMC did and what Jerome Powell is expecting going forward. The next meeting is going to be in March, so stay tuned for that. We covered it live, so make sure you subscribe for more content. But let's walk you through what happened today. Today was a great day. Microsoft beat earnings and revenue expectations, but the stock was down right after earnings because they missed on cloud revenue. This is to be expected given the fact that Copilot was now being packaged with Office for regular users and family. Interestingly enough, market seems to be recuperating a little bit, and the call tomorrow we're going to be covering it, or at least the summary. So stay tuned. Tesla missed on earnings and missed on revenue, but this was expected as they missed deliveries. This data was already given, but people are looking into the future for Tesla. People are not paying attention to the now. Tesla is now a tech company, is the way that everybody wants to look at it. I disagree. They're a car company because they sell cars. Again, most of the businesses here produce something and then they are going into the technology side of things. So Microsoft sells software, cloud, and they want to produce AI. Tesla, same. Meta is an advertising company that wants to do AI. So they seem to be going that way. The big surprise today was IBM. IBM ended up beating earnings per share and revenue. This is something that I want to do a deep dive, so make sure to hit that like if you want to find out more, because I want to do a deep dive and potentially share the video when I know more, because I haven't been paying attention. And Meta had a fantastic quarter. Earnings per share beats by almost $1 and 24 cents. It was fantastic. It is great. Revenue beats by more than $1 billion. It is great. Now, the interesting point, and this is for NVIDIA investors such as myself, please take whatever I say with a kilo of salt. We don't know. But we have capital expenditures going from 60 billion. So sorry, from what the market was expecting to be 52 billion all the way from to 60 to 65 billion in 2025, and they're expecting expenses to also go up. They didn't provide any guidance for 2025, which might have spooked markets a little bit, but again, they do see a potential for growth in revenues and earnings going forward. They're still spending money in Reality Labs. This is likely to continue because they want to be in the frontier of what happens next. We are in an environment where if you're not innovating, you're staying behind and you become an IBM. But right now IBM is doing great, so now we don't know. This week has caused so much uncertainty, so much doubt. All investors don't even know where we're going. Trump is talking about invading Greenland, invading the Panama Canal. Nobody knows what to take seriously at this point. He sounds a bunch of pieces of paper, and we're expected to just believe that the market's going to go up. Well, investors don't buy it. So that's what we're seeing right now in markets. And did I talk about the FOMC? Dragos, did I talk about the FOMC? I don't know. I don't even remember. The FOMC, I'm just going to say it again. They freaking held the interest rates flat. They are doing quantitative tightening by reducing their balance sheet. That is continuing. And they are going to be data dependent going forward. I think I already said that now that I've said it, but again, data dependent, data dependent, data dependent. And Donald Trump does not matter. Donald Trump can sell whatever he wants to Jerome Powell, but right now the person in power in the Fed is Jerome Powell, and he's going to make the best decision possible for the economy without taking into consideration what Donald Trump wants. He hasn't even called him. He hasn't even called. So I think that's it. We're going to have GDP tomorrow, and we're going to have PCE on a Friday. He was very central, Jerome, which tells me that the data is probably going to come in line with expectations. If the data gets better, we could see further cuts down the line. If the data does not get better, then we are likely to not see any cuts and potentially some hikes. But nobody's talking about hikes. Don't mention the hike word because we don't want that. We don't want that. Oh, man. I'm losing less money at the end of the day. Thank you very much for watching. Cheers, everybody. It's been that kind of week. Peace. Oh, that's so good. That's so good. Oh, yes. Freaking drinking whiskey like tequila is outrageous. It's outrageous. Let's write it down. 312 00. That was great. That was great. Cheers. Oh, yeah. Cheers. I think it's to the point. I need to get better at them. I need to get better at them for sure. Oh, man. Which one? Hmm. What link? Where'd you send me? Man, I lost my tick today, and I'm upset about it. I lost my Which one? I'm trying to figure it out. Did you send me a link? Did you send a link on YouTube? I don't know if they let it. Because I'm not able to see it. Yeah, I'm not able to see it. You want to freaking? This is me. This has been me the whole freaking. This was me. Huh. I think like they don't allow it or something. I'm not even sure. Huh. I can't find it. I can't find it. But yes, market's been crazy. Market's been crazy. Wow, man. So stressed. Oh man. Dragas, thanks so much for watching. I appreciate you. Milo, thanks so much for watching. Colton, thank you so much for watching. If you guys have any questions, leave them in the comments below. I'll do my best to answer them. Find me on Twitter, eToro, or all of the social media. More than happy to answer any questions. Peace out, guys. Peace out. Cheers. Cheers. Oh man. Nah. Actually, no. I'm actually streaming a lot in the next couple of weeks, dude. Um, I'm actually gonna be streaming a lot. Look at this. I'm streaming. I'm streaming tomorrow night. I'm doing Intel earnings tomorrow. And then, but that's gonna be quick. And then I'm doing Palantir earnings, and I'm doing Supermicro earnings, and I'm likely gonna do a couple more. Like man, it's Trump season. Trump line episodes are out like every day. Yeah, I'm probably gonna be streaming a lot. It's gonna be crazy with Trump in power. Pwah, pwah. But yeah, thanks so much for watching. Peace out, guys.